Want to find sharper entries and exits in your crypto trades? What if I told you the key isn't a magic indicator, but combining three powerful tools that pros use every single day? In this video, we're going to layer volume profile, Fibonacci, and fair value gaps to pinpoint high probability trade setups. This is a quick sneak peek of the strategies I break down in my ebook, so let's get right into it. We'll be using the Bitcoin 1-hour chart as our canvas today. Remember, the goal here is Confluence. That's where multiple signals from different tools point to the same story. A single indicator giving you a buy signal is just noise. But when three line up, that's when you pay attention. We're looking for areas where the market is most likely to react, giving us a strategic edge. First up, let's talk about volume profile. This isn't your standard volume at the bottom of the chart. It shows you asterisk where asterisk the volume was traded at specific price levels. We're interested in a few key areas. High volume nodes, or HVNs, are zones of high activity and acceptance price likes to get stuck here. Low volume nodes, or LVNs, are the opposite, price tends to move through them quickly. We also mark the value area high and low, which contains 70% of the trading activity, and the point of control, or POC, the single price with the most volume. Think of HVNs as magnets and LVNs as voids. We watch for price to either bounce from or slice through LVNs, and we use the value area to understand where the market considers fair price. Next, we layer on our Fibonacci tool. For this, we'll draw a retracement from a significant swing low to a recent swing high. This helps us map out potential support levels during a pullback. The levels I focus on are the 38.2%, the 50%, and the golden pocket, which is the 61.8%. These aren't just random lines. They represent key mathematical ratios where traders often place orders. For profit targets, we can use Fibonacci extensions, like the 1.272 and the 1.618, to project where price might head after breaking a high. Now, the magic happens when one of these key fib levels lines up perfectly with a low volume node from our volume profile. That's our first layer of Confluence. Our third and final tool is the fair value gap, or FVG. You might also hear this called an imbalance. Look for a strong three-candle pattern where a big candle moves so quickly that the wicks of the candles before and after it don't overlap. This creates a literal gap in the market, an inefficiently priced area that the market often wants to revisit or fill before continuing its trend. These FVGs act like magnets for price. A partial fill or a full fill of an FVG can be a prime entry zone. And when you find an FVG sitting right inside that golden pocket fib level, which is also in a low volume node, that's an A+ setup in the making. So let's put it all together with a practical Confluence example. Imagine price is pulling back from a recent high. We've drawn our Fibonacci retracement and see it approaching the 50% to 61.8% zone. Our volume profile shows a clear low volume node in that exact same area. And to top it off, we spot a small unfilled fair value gap right in the middle of it. This is our high interest zone. We don't just blindly enter. We wait for price to dip into this zone, fill the gap, and then show signs of strength like reclaiming a key level on higher volume. Our stop loss would go just below the wick that created this entry, our invalidation point. For targets, we can look at the next high volume node above us, or use our Fibonacci extensions like the 1.272 and 1.618. Of course, no strategy is complete without solid risk management. Before you even enter a trade, you need to know your position size and where your invalidation level is. If the price goes below that level, the trade idea is wrong, and you get out. Simple as that. Don't let a small, manageable loss turn into a disaster. Also, avoid entering trades directly into a major high-volume node or a significant weekly level. Those are areas of congestion. It's much smarter to wait for a confirmed break and retest. Let the market show its hand first. Everything we've covered today is a small excerpt from my ebook, Advanced Technical Trading Tools. If you want to dive deeper into these playbooks, see more real-world chart examples, and get checklists to guide your trading, you can find my full collection of ebooks on the Trading Venture Club website. The link is right there in the description below. These guides are designed to give you a structured, professional approach to the markets, I hope this breakdown helped you see how powerful Confluence can be. If you got some value from this video, please give it a like. It really helps the channel. And make sure to subscribe and hit that notification bell so you don't miss my next trader focused breakdown. Thanks for watching, and I'll see you in the next one.